The numbers out from Bank of America. Here are the numbers for the fourth quarter. Equities trading revenue coming in at $1.37 billion. The estimate $1.33. Fourth quarter EPS 82 cents. Brian Moynihan, the CEO, chief executive, saying the fourth quarter saw record levels of digital engagement. We'll talk about that side of the business in just a moment. On FIC trading revenue, $1.57 billion. The estimate $1.76. Overall trading revenue, $2.93 billion. The estimate $3.1. Investment banking revenue, Tom Keene, for the fourth quarter, $2.35 billion.
Yeah, I go right to the ratios. Return on tangible common equity, 17%, maybe a little souther of a few others, but that's not a bad number. And again, what's so important here, John, is each of these stories is different. They're not all one bank.
The difference coming out of the numbers, there is no difference. Looking at the stock price right now, Lisa, we're seeing that story again. Down off the back of the numbers, we're down by 2.38% in early trading.
They also missed on trading revenues. How much does this sort of go to Gerard Cassidy's point that year-over-year comps are going to be very difficult? How are revenues going to be higher this year than last year after the blockbuster year that we saw, the blockbuster underwriting and banking revenues? Are they going to be able to repeat that? And if not, is that going to take a hit in terms of their share price?
We'll get to the analyst at RBC in just a moment. I want to get to Shonali Basak to break down these numbers. Shonali, you've been pouring through the press release. What do you see?
There's a couple things here, John, and one is that, yes, trading came in a little below expectations. Again, fixed income being the big problem here. We've seen that across the other banks as well. Net interest income a little above expectations, which is good news for Bank of America. A small cliff note here, though, is that a 100 basis point parallel shift in the interest rate yield curve could benefit net interest income by $6.5 billion over the next 12 months. Obviously, that's a double-edged sword, and we've seen the same kind of disclaimer from JP Morgan. This environment for lending is highly sensitive to the curve and not just the absolute level of near-term interest rates.
What's the major distinction between Bank of America and JP Morgan, Shonali?
Well, one thing is going to see their headcount plans. Remember, it was just a couple of years ago here, we saw Brian Moynihan slashing billions of dollars of costs like it was nothing. He had that target of $53 billion in expenses annually. And now, will investors be patient with Bank of America as they seek to gain scale against a JP Morgan and consumer here?